Welcome to your deep dive. So, you're thinking about moving from a demo trading account to a live one, and you want to know, are you really ready?
It's a big step,
Yeah, it is kind of a big step.
like, practicing your parallel parking
Yeah.
in an empty lot
Yeah.
versus navigating rush hour traffic in a big city.
Oh, I like that. Yeah,
There's definitely a different level of intensity when there's actual money on the line.
exactly. Exactly. And that's where this article comes in called Translated Title of Article. It outlines 5 key signs that you might be ready for live trading, but it's not just a generic checklist. It's really insightful, actually.
Yeah, absolutely. I think you'll find some of these signs go beyond just the surface level.
Yeah, I think so too. Let's dive into the first sign, achieving consistent profits in your demo trading. Now, I know what you're thinking. Of course I need to be profitable. But what does consistent really mean here?
Well, it's not about winning every single trade. That's honestly a recipe for disappointment. Consistent profitability is about demonstrating that you have a sound understanding of risk management and developing a trading strategy with a positive expectancy.
Okay.
Essentially, you're aiming to make more on your winning trades than you lose on your losing ones
Yeah,
over time.
got it. So it's more about the overall trend than individual wins and losses. Okay, so how do you know? How do you know if you're truly demonstrating that positive expectancy? Like, are we talking months of consistent wins here?
I think a good way to think about it is like, you wouldn't judge a chef based on a single dish, right?
Right.
You look at their overall menu and their consistency in delivering delicious meals. Similarly, evaluating your demo account performance should happen on a monthly basis. It helps you just see the bigger picture, identify any weaknesses, and track your progress.
Okay, that makes sense. So what does a good monthly evaluation look like? What specific things should I be looking at or analyzing?
Um, well, you'll want to delve into metrics, like your win rate, so what percentage of your trades are actually profitable.
Yeah.
Then consider your average win size compared to your average loss size. Are you letting your winners run? And cutting your losses short.
Mm-hmm.
And this can really reveal a lot about your risk management and your discipline. And don't forget to analyze those common mistakes that you're making. Are you consistently entering trades too late or exiting too early? Identifying these patterns is key to improving.
Right. It sounds like you're advocating for like a data-driven approach, not just, hey, I made money this month, great,
Yeah.
but like really a deeper dive into why those results happened.
Yeah, exactly. It's about having a more systematic approach to trading, not just relying on gut feeling or luck.
Okay, I like that. So you've got the consistent profits, you're analyzing your performance, but I have a feeling that's just the tip of the iceberg. What's the next sign that you're ready to go live?
So the next sign is all about having,
Mhm.
and this is key, sticking to clear risk management rules. It's like wearing a seatbelt when you're driving. You might be a great driver,
Right.
but you still buckle up, right, to protect yourself from the unexpected.
Okay, I like that analogy. So you're saying that most traders like crash without a seatbelt.
More often than not, unfortunately. And it's not just about having the rules, it's about actually following them. Before you go live, you need to define those non-negotiables.
Okay.
So for example, what is the maximum percentage of your account that you are willing to risk on any single trade?
Okay, so let's say I have a $10,000 account. Does that mean I should never risk more than $1,000 on a single trade?
Well, that's a good starting point, but it really depends on your individual risk tolerance and trading style. Some traders are comfortable with 2%, others prefer to stay below 1%. There's no one-size-fits-all answer.
Right.
The key is that you have that rule
Yeah.
clearly defined, and as we said, sticking to it religiously.
Okay, yeah. So think about your maximum drawdown tolerance. How much of a dip in your account can you handle before you need to like pause and reassess?
Exactly.
That's starting to sound a bit intense, but I get it. These are the tough questions that you need to kind of answer before you're playing with real money.
Yeah, and don't forget about the number of losing trades you're comfortable with. Before you hit pause, we all experience losing streaks, but knowing your limit helps you avoid making emotional decisions when things get tough.
Okay, so it's like having a built-in emergency brake for your trading.
Precisely. And a trading journal is your best friend here. Write down your rules, track your adherence to them, and analyze how well those rules are working for you. It just adds a layer of accountability, and it helps you stay disciplined even when emotions run high.
Speaking of emotions, let's be honest. Trading can be a bit of a roller coaster. Even in a demo account, I know I still get that little knot in my stomach when a trade goes against me. So tell me about sign number 3.
So sign number 3 is all about emotional control, especially during losses. And you're right, those feelings are totally normal. The key is to try to shift your mindset and view losses as part of the process, not a personal failure.
Okay, easier said than done, right. But I'm all ears. How do you actually make that mindset shift? Because I feel like even if you know it's part of the game, those losses can still sting a little bit.
Yeah, it takes practice. But having a really solid trading plan can act as your anchor.
Yeah.
Think of it like having a map and compass in a dense forest. Even when you can't see the way forward, you know you have something there to keep you on track.
Okay, I love that analogy. So the plan helps you avoid making those like impulsive decisions
Right.
in the heat of the moment.
Exactly. And there are specific techniques that can really help you maintain that emotional control. First, you got to predefine your exit points for every trade before you even enter it.
Okay.
That way, if it hits that point, you're out, no questions asked, regardless of how you're feeling about it.
Right, it's like setting those boundaries
Yeah.
in advance.
You
So
got it.
you're not tempted to, move the goalposts when things get emotional.
Exactly. Another technique is to take breaks when you need them. Step away from the screen, clear your head, come back with a fresh perspective.
It's funny you say that because that advice applies to so many areas of life, not even just trading. Sometimes you just need to walk away from something
Absolutely.
and come back to it when you have a clearer mind.
Absolutely. And finally, remember to focus on the process, not just the outcome of any single trade. It's about consistently executing your plan and making those well-informed decisions.
Okay.
The outcome of individual trades will always vary, but if your process is sound, you're setting yourself up for that long-term success.
That's such a valuable perspective. It's not about, chasing every win. It's about trusting that process that you've developed. Okay, ready for sign number 4.
Bring it on. This one might be my favorite. It's about learning from your trading losses.
I really appreciate that you included this sign. It shows a real growth mindset. Most people just want to, sweep those losses under the rug, pretend they never happened.
It's tempting, right? But those losses are a gold mine of information. If you're willing to dig deep, every loss, big or small, presents an opportunity for you to refine your trading. The key is to analyze what went wrong, what factors influenced the outcome, and how you could have managed the trade differently.
So instead of, dwelling on the loss itself, you're using it as data to improve your trading system.
Exactly. Ask yourself, did I ignore a key indicator? Was my entry point poorly timed? Did I let my emotions get the best of me and exit the trade too early or too late? These are all valuable insights that can help you avoid making the same mistakes again.
Right. And I imagine, a trading journal is super helpful for that kind of post-trade analysis.
Absolutely. And there are different journaling techniques you can use. Some traders focus on identifying cognitive biases or emotional triggers that may have influenced their decisions.
Okay.
For example, were you overly confident after a winning streak and you took on more risk than usual? Or did you hesitate to cut your losses because you were afraid of being wrong? Recognizing these patterns can significantly improve your trading psychology.
It's almost like you're becoming your own trading therapist. You're analyzing your behavior, identifying those negative patterns, and actively working to correct them.
That's a great way to put it.
Yeah.
And, I actually remember one of my biggest early trading losses. I was so convinced that the market was going to move in a certain direction, but it completely reversed on me.
Wow.
At the time, I was devastated. But when I actually sat down to analyze it, I realized that I had completely ignored some pretty key economic indicators.
So even the expert here has made mistakes and learned from them. That's actually pretty reassuring. It shows that, continuous learning is such an essential part of this journey, no matter how experienced you are.
Couldn't agree more. We're all students in the market, constantly learning and adapting.
Right. Okay, so let's move on to sign number 5, mastering your broker and platform. This one feels a little more practical, perhaps less glamorous than, emotional control and learning from losses, but I'm sensing it's just as crucial.
It is. Think of it this way. You wouldn't want to enter a race car without knowing how to drive it.
Yeah.
Similarly, you need to be completely comfortable with your chosen broker and platform before you go live.
Okay, so you're saying don't just assume everything's going to work the same way in a live account as it did in your demo.
Exactly.
So what specific things should I be testing and familiarizing myself with?
Well, first and foremost, understand the interface. Can you navigate around the platform seamlessly? Can you find the information you need quickly and easily? Then, familiarize yourself with the order types offered by your broker. You should be comfortable executing market orders, limit orders, stop-loss orders, and any other order types that align with your trading strategy.
So it's about understanding the different tools at your disposal and how to use them.
Exactly. And don't forget about fees. Every broker has its own fee structure. So make sure you understand how those fees will impact your profitability.
Right.
You should also be aware of margin requirements, especially if you plan on using leverage.
Margin requirements. That's another one of those terms that can sound a bit intimidating to like newer traders.
Yeah,
Can you break that down for us?
sure. Margin is essentially the amount of money that you need to have in your account. To open a leveraged trade, it's like a good faith deposit that your broker holds to cover potential losses. The specific margin requirements will vary depending on the trade and the broker. So it's crucial to understand how it works before you start using leverage.
Okay, so it's not free money, right? It's more like borrowing power. That comes with its own set of, risks and responsibilities.
Exactly. And while we're on the topic of potential risks, don't underestimate the importance of good communication with your broker. You need to know that you can reach them quickly and easily if there's a technical issue or an emergency.
Okay, so it's like having a reliable pit crew
Yeah,
when you're in that race car.
exactly. You want to be confident that your broker has your back. If something unexpected happens,
Okay, so we've covered the 5 signs: consistent profits, a solid risk management plan, emotional control, learning from losses, and mastering your broker and platform. So does that mean you're definitely ready to hit that go live button?
well, that's where we need to inject a dose of realism. Even with all those boxes checked, success in a live account is not guaranteed. Trading with real money brings a whole new level of psychological pressure.
Oh, so it's not just about the numbers, it's about the mental game as well.
Absolutely. And that's something that you can actually start practicing now, even in your demo account. Mindfulness techniques, meditation, journaling, these can all help you stay calm and focused when the stakes are higher.
So it's like you're training your mind to be like a trading athlete, building up that mental resilience.
Yeah, I like that. And remember, there are also resources out there to help you. Books on trading psychology, working with a trading coach. Don't be afraid to seek guidance in this area.
It's a reminder that trading is a journey, not a destination. You're constantly learning, evolving, and adapting to the market.
Yeah, it really is. And just like an athlete wouldn't enter a competition without proper preparation, you wouldn't want to jump into live trading without addressing the psychological aspects.
This has been such an insightful conversation. It's really highlighted that trading is about so much more than just, picking the right stocks or assets.
Yeah, it's about having that holistic approach.
Mhm.
You need the analytical skills to develop a sound strategy, the discipline to manage risk effectively, and the mental fortitude to navigate those inevitable ups and downs.
Absolutely. So before we wrap up, let's do a quick recap. Of those 5 signs that you might be ready for live trading, first, we talked about consistent profits in your demo account, which, indicates that your strategy has a positive expectancy over time.
Right. And remember, it's not about winning every trade. It's about the bigger picture.
Yeah, exactly. Then we discussed the importance of clear and adhered to risk management rules. You've got that metaphorical seatbelt on, protecting your capital from those unexpected market crashes. And we dove into the often overlooked aspect of emotional control. You're not letting those losses define you. You're viewing them as data points and opportunities for growth.
Exactly.
And speaking of growth, we talked about actively learning from those losses, refining your strategies, and becoming a more informed and adaptable trader.
Yeah, that's key.
And finally, we emphasized the practical side of things, mastering your broker and platform. You're comfortable with the tools of the trade, you understand the fees and margin requirements, and you have a good line of communication with your broker.
A really solid framework for assessing your readiness. But as you said, it's just the beginning of the journey.
Right, it's just the beginning. Okay, so I want to leave our listener with one final thought. Imagine you've been successfully trading live for a year. What does that feel like? What kind of freedom or opportunities has it created for you?
That's a really powerful question. It's about connecting with your why, your motivation for trading in the first place.
Yeah.
Because at the end of the day, trading is a means to an end. It's about achieving your financial goals, whether that's building wealth, securing your retirement, or funding your dreams.
Exactly. So as you continue your trading journey, keep that vision in mind. And remember, this deep dive was created just for you. If you have any more questions, please don't hesitate to reach out. We're here to support you every step of the way.
We're always happy to help.
Okay, that's it for this deep dive. We'll see you next time.